Welcome back to our Forex analysis video for the upcoming week. The first pair we have today is the Australian dollar versus the Japanese yen. As you can see that the recent price action suggests that the price has been moving in a range-bound market. Also, we can see that on the last trading session, the price took a resistance from the upper range after forming an evening star candlestick pattern. On the larger time frame, we can see that the price was forming an higher high and higher low formation, but just recently it changed its trajectory and it has just started. We can consider that it is on a short-term downtrend. Now, what we can do is, as soon as the price crosses this swing, the swing of the last 4 to 6 hour candles, we can go short. We can just short it as soon as the price crosses the swing with a stop loss above the resistance of the last few candles, and expect a target of at least 1:1.5 risk to reward ratio, and the final target should be the support of the lower range. The next pair which we have is the euro versus the New Zealand dollar. As we can see that the price was moving in a range bound pattern, after which it gave a breakout right here and it rose to some extent, but it could not sustain itself and fell back between the range again. Now what we can expect next is, if we go to the 1 hour time frame, we can see that there is a head and shoulder pattern formation here. The head and shoulder pattern gave us a breakdown right here, but it did not sustain and it again went back to the resistance of the upper range. Now what we can do next right here is, if we get a candle closer below this trend line, we can go short with our stop loss above the candle of the breakdown candle, and we should expect a target of at least 1:1.5 risk to reward ratio, and the ultimate target should be the support of the lower range. The other long opportunity will be if it gives a breakout right here with good volumes, we can go long with our stop loss below the breakout candle, and same as before, we should expect at least 1:1.5 risk to reward ratio, or our ultimate target should be the position of the head, or we can expect more bigger targets if it gives a strong breakout from here. So the next pair we have is the New Zealand dollar versus the Canadian dollar. We can see that the pair was in a downtrend recently, short-term downtrend, after which it just started making a higher high and higher low formation. Now after a big up move, it is forming a flag-like pattern right here. So how we can confirm is that if we put some Fibonacci from the last low to the high, we can see that the 38.2% rejection is right here. Also, the 38.2% rejection coincides with the support zone, so from the last support zone. Now we can have two things right here. If the price comes down here and forms a big bullish candle, we can go long from this place as well with our stop loss just below this support line, and our target should be at least 1:1.5 risk to reward ratio, and then further target should be the high of the pole of the flag and pole pattern, and the ultimate target should be around 0.83415, which is the last swing. On the short side of this trade, we can go short as soon as we get a candle closer below this support zone, and our target should be our stop loss should be above the breakdown candle, and our ultimate target should be somewhere near the support zone. And the last asset we have for this week's analysis is the US oil. We can see that the US oil was moving in an ascending triangle chart pattern. Now the current price is just on the support zone. If we move to the 4 hour time frame, we can see that the price formed a bullish candle on the last 4 hours of the last trading session. Now what we can do is, if on Monday the price crosses the high of this candle, we can go long with our stop loss just below the support zone, and our first target should be at least 1:1.5 risk to reward ratio, and our ultimate target should be on the resistance of the ascending triangle pattern. On the short side of the trade, we can go short as soon as we get a candle closer below the support zone, and our stop loss should be above this candle, and our target should be at least 1:1.5 risk to reward ratio, or we can put our target in the successive swings. The first swing should be this, and the second we can consider this as a swing as well as this, and just in case these swings are broken, we can get a very huge target. So that will be all for this week's analysis. Thank you.